market structure. Yeah, if you haven't watched the video, the previous market structure video, you have to pause this video and go back and do so. So this particular one will be titled Market Structure 2.0, Market Structure 2.2, which is more like an advanced. So yeah, okay. So yep. All right. So on this video will be showing you illustration and live chart samples that I've sorted out on exactly how you are to navigate the market, how to go about the market the right way, to view market structure, and first thing you need to do when you open your chart. So the first thing you need to do when you open your chart, say for example we're looking to analyze Euro USD. Now what you have to do is first know what the higher time frame is doing. So first you have to go to the higher time frame. So when I say higher time frame, I mean uh 1 day, 1 week, and 1 month. So 1 month might not really be that necessary, but yeah, 1 week and 1 day I'm going to classify higher time frame. That's HTF. So our higher time frame determine our overall trend. Our higher time frame determine our overall trend. Now H4 as intraday. H4 and below will determine momentum. H4 and below will determine the momentum of the price. So H4, H1, H2, H3, H6, and thereabouts. Anything below 1 day time frame is intraday, and then our lower time frame will start from 30 minutes down. So we have 30, 15, 10, 5, 3, 2, 1, and even 60, 30 seconds time frame. So now let's go. So every time frame has its own market structure. You have to understand this, that every time frame has its own market structure. So putting them together and having an understanding of what the higher time frame, which is the daily and the weekly, the weekly are saying, will help you know how to position yourself on the lower time frame. And also understanding what the lower time frame, which is H4 and below, are saying, will help you determine where you are going to be trading to. So that means sometimes you trade a retracement of the higher time frame, or you trade a continuation of the higher time frame. So the lower time frame will help you understand or help you know whether you are to be trading the higher time frame retracement or the higher time frame price continuation. Okay, so now for example, let's say our higher time frame is this. So we have bearish trend, okay. So for example, let's say this is the daily time frame. Now you're going to have the weekly time frame, sorry, the 4 hours time frame or 1 hour time frame, having something like this. Okay. Okay, so now if you look closely at this, you notice in the intraday, which is the black line, we have the market trending downwards as well. Now when it gets to somewhere like this area, which is the higher time frame low, which happens to be the higher time frame low, which happens to be the 1 day low, you notice that on the intraday you are going to have a break of structure that will change that intraday from downtrend to uptrend. But now that doesn't mean that the overall trend is bullish now. But you should remember that the higher time frame is showing you a downtrend and you are currently at the low of the higher time frame, and it is the same reason why you are having a break of structure on the lower time frame to go bullish. Now you understand that if you catch any kind of movement here on the lower time frame, you should know that you are trading a pullback, a retracement of the higher time frame. Now, say for example, we have something like this now. So we have this. Okay, so now here there's a break of structure on the lower time frame, but on the daily time frame, which is this red line inside, you are sitting on the lower low of the daily time frame. Okay, so you are sitting on the lower low of the daily time frame, but on the intraday you are also in a lower in a lower low. But now you're seeing a break of structure, right? Now you're seeing a break of structure. Now, why are you seeing this break of structure? It's because the higher time frame needs to retrace back to this POI here, somewhere around here. Okay, so higher time frame needs to retrace back to this area here. So for the higher time frame to retrace, the lower time frame has to break structure. So on the lower time frame now you have a break of structure. So if you have this, you can catch your buy your long position somewhere around here and do this. You follow the market on the lower time frame. Now, how do you get out of this market? Understanding that the higher time frame is going to pull back to, let's say, somewhere around here. So this area should be your target, your overall target on the lower time frame. So whatever you're doing, you're doing on the lower time frame, whatever you're doing on the lower time frame, the buy that you're buying on the lower time frame, you have to look out to take profit here, because you understand that the lower time frame, take profit there, because you understand that the lower time frame is just breaking structure so that it will fulfill what the higher time frame is telling you. Higher time frame is telling you that I need to retrace to my previous lower high and possibly continue the downtrending market, or maybe break the structure up there. But because you are not sure, you don't know yet for real that there's going to be a break of structure somewhere around there on the higher time frame, so you have to make this area, this obvious POI your target. Now you are going to long on the lower time frame down to this area, right? This POI of the higher time frame. Two things might happen on the higher time frame. You might have a break of structure. So when you have the break of structure, it now means that the higher time frame has now become bullish. Okay, higher time frame has now become bullish, and then what you now have on the lower time frame, let's say for example you're going to have something like this on the lower time frame. So you have a break of structure as well on the lower time frame. So this lower time frame now tells you that, okay, for some reason the market is going to continue moving up. So price is now in an uptrend, or price is now bullish on the higher time frame. So on the lower time frame, price has been bullish. All right, price has been in an uptrend. So all you need to understand that the price has broken a higher time frame point of interest, or the previous lower high on the higher time frame has been broken. So you still expect the price to create a new high. So you are expecting the price to create a new high, let's say somewhere around here, expecting the market to create a new high on the higher time frame. So because you know that the market has to create a new higher high, the market has to create a higher high on the higher time frame. So this will give you the leverage or the understanding to stay in this long position until you notice the higher time frame rejecting around somewhere around there. So probably if you're still holding your buy position that you got in from here, if you're still holding your buy position from this area, you should just keep trailing your stop loss, like taking partials. You should just keep taking partials. Now when I say taking partials, I mean closing. For example, if you opened a trade with one standard lot size, so you're looking forward to close at least 0.50. You get. So now, if you're on the lower time frame, what you've noticed here is that price has been creating different type of POI on the lower time frame, and it has been mitigating them, right? So you're looking to take another buy entry in case you're already out of this trade, or you're looking to take another entry. You can still bag another entry from this POI here on the lower time frame and go higher. Now know that when the higher time frame meets create a new higher high, that means when the higher time frame starts rejecting somewhere around here, you should start looking for how to get out of the trade, and then you can now go back to the intraday, to the lower time frame, and look for a break of structure like this. Sorry. You should now go to the lower time frame and look for a break of structure like this. So you have this break of structure here. You're looking to take a sell position from this side now. So you sell from here, and you're coming down. Now, why are you selling now if the price is still bullish, if the market is still bullish? You are selling the retracement of the higher time frame. You're selling the retracement. You know that the higher time frame has to retrace, so you should be selling. Now, on the lower time frame, you are going to have a break of structure. You get what I mean? You're going to have a break of structure. Let's say something like this. So you're going to have this break of structure here, which now turns the lower time frame, or turns the intraday to bearish. But you know that the intraday is just bearish for a short time, unless of course it breaks this previous low. Okay, so you know that overall you are going to be trading the higher time frame pullback. So higher time frame has to pull back to somewhere around here. All right, so higher time frame has to pull back to somewhere around this area here. So you now have what? The market pulling back to this area on the higher time frame. That means on the 1 day or the 1 week, you have the market pulling back to this area. So by the time this market is doing this long, you're going to have a very long bearish trend on the intraday or the lower time frame. But you know that price is not going to be bearish forever, because once the higher time frame meets comes to mitigate the previous swing low that created this new higher high here, higher high here, you are going to start looking for buy positions, because you're looking for buy positions there on the higher time frame. So on the lower time frame, you look for a break of structure to go to the upside. Now, that being said, what if you understand, let me point out this again. So I mean, what you're looking for, there are two things you need to see in the market before you take your buy or your sell, before you place your trade. So when you're doing analysis, so you're looking for number one, a break of structure, and number two, maybe wyckoff off. So number one, you want to see break of structure, is BOS, and then number 2 or Wyckoff. So Wyckoff accumulation or reaccumulation for the buy, and Wyckoff distribution or redistribution for the sell. So these are the two things you need to see: BOS or Wyckoff schematic. So it's either you see in the Wyckoff schematic or you have a breakout structure. So now for okay, so now let me go back again. When you have the higher time frame creating a high, so let's say for example this is our higher time frame now, the black, this is our higher time frame has this kind of structure. So what we can see here now, right, let's say this is the 1 day time frame. So what we can see here now is the 1 day already, already rejecting that area. So probably we have a bearish engulfing candle here on the 1 day time frame. Now all we need to do is go to the intraday, maybe 4 hours or 1 hour. So go to intraday. So when I say intraday, I mean 4 hours below or 12 hours below, anything below 1 day. So when you get to the 4 hours, you are looking for what? A break of structure or Wyckoff. So you either would see any of these two. So you're looking for a break of structure or Wyckoff. Now let's say for example we look at the 4 hours and we couldn't find BOS or Wyckoff. So we now have to go down again to 1 hour. Now if you get to the 1 hour, you're surely going to see the break of structure, or you get to 30 minutes, you're surely going to see the break of structure on the lower time frame. So when you get to 1 hour, let's assume we go to the 1 hour now, we find out that the market had been rejecting this area, and we have something like this there on the 1 hour time frame. So we have this break of structure on the 1 hour time frame. Now remember, on the daily time frame, we are having this bearish engulfing candlestick there, or we are having that rejection on the daily time frame. But when we get to the 1 hour time frame, which is our intraday, we can see that the price has broken structure there. So the lower time frame has changed from bullish to bearish already. So because we know that we have a break of structure on the intraday, on our intraday, so we are going to be looking for sell. Now what we should be doing now is looking for sell. So if we are selling, we know that we are trying to do what? We are trying to catch a sell of this higher time frame pullback. All right, so if we are able to catch this sell from here, because this is where we have the break of structure, right? So if we are able to catch this sell from this IFC candle here, or this other block here on the lower time frame or on the intraday time frame, we are able to catch this sell like this. So this is where you are going to be staying up to. So we have the market trending down into our higher time frame POI. Okay, into our higher time frame POI, we have the market trending downwards into our higher time frame POI. So on our lower time frame, we'll be having a smooth downtrend. On our intraday, we'll be having a downtrend. But on the higher time frame, which is maybe the daily or the weekly, we are just going to see series of bearish candles or mixed with a little bullish candle or whatever. We are just going to see a nice pullback down to this side, right, down to the higher time frame point of interest. And then when the market gets here, what do we do again? You see the price has started rejecting on the higher time frame. We look for break of structure again. All right, so we look for break of structure again on the lower time frame. So we look for something like this. Okay, so we look for something like this. Now we have that break of structure here. All right, we have that break of structure here. We look for break of structure on the lower time frame to do what? When we get this break of structure on the lower time frame or on the intraday per se, when we have this break of structure there, we know that the price is going to change to bullish, right? And now that we align with our higher time frame, because our higher time frame has already done what? Our higher time frame is still bullish, right? So our higher time frame is still bullish, but it just did what? Retraced to the previous
valid higher low. So our lower time frame was bearish because the higher time frame has to retrace to the previous valid higher low. So now that we now have our lower time frame bullish, now aligning with our higher time frame, which is bullish as well, we don't have any reason to look for sales again. So we are looking for buy from anywhere around there, and this will happen on the lower time frame. While on the higher time frame, we just have this, this kind of movement up until we find another rejection again. So as simple as that. So let me quickly show, sorry, in case you would want to draw any of those things. So pardon my really bad drawing, or yeah, I guess this is just illustration, so I guess uh it should be a little bit understandable, right? Okay, so now let's look at some samples we have here. So now we have this sample here, Euro USD, higher time frame, 1 day. This is a daily time frame. So what can we see? Higher time frame is bullish, right? Now this is the previous higher low, yeah, previous higher low, yeah, and then the market created what higher high here on the higher time frame, right? Now they pulled back, right? They pulled back, created this low here. There's a low here, okay? Because this area is lower than this area, right? So created this higher low here, but it is not a valid higher low yet. Okay, so if you've watched the previous market structure video, you understand what I'm saying now. Now, it is not a valid higher low yet because why? It has not taken out this high. Now, if we look closely, you notice that we have a failed, so we have a failed higher high there. Okay, so we have a failed higher high there. So the market failed to create a new higher high. So because every valid higher low has to create a new higher high. So the market failed to create a new higher high. Yeah, it should have created a high that is higher than this previous one. So it failed to create a new higher high. So we know something is trying to happen, right? Something is beginning to happen there. So now we have this. Now we have this. We have the market again. If you draw this to here, so you notice that the market even broke the previous higher low here. But this is not even valid. This is not a valid break of structure. Why? Because this particular higher low here that had just been broken here did not break, did not create a high. Okay, so this is just there. So our real break of structure is going to come when they finally break this level on the higher time frame. So our real break of structure on the higher time frame is going to come when they finally break this level. So that is when we know we have a break of structure on the higher time frame. But now this is where the market is. Now on the higher time frame, it's still bullish, right? But we can see that the particular day candle we are looking at here, the last candle here is bearish. Okay, the last daily candle here is bearish. Okay, and the market had already, the market is technically, the market is trying to break this higher low, but we are not sure yet because we don't have that break of structure yet. But our higher time frame is still bullish, but looking like it wants to break this structure because already we have this failed high. So because we have this failed high, I'm mostly going to be looking at, okay, maybe sell, but I can't take that decision now until I go to my intraday. All right, until I go to my intraday. So if, okay, sorry, pardon me, this is 1 week time frame, not 1 day time frame. I think I did a mistake here by writing 1 day. So this is a 1 week time frame. Okay, so this is 1 week time frame. So on our 1 week time frame, we have a bullish trend. Okay, so price has failed to create a new higher high here on the weekly time frame. Okay, so price has failed to create a new higher high here. So this is a failed high on the weekly time frame. So price is still bullish on the weekly time frame, but it's looking like it wants to break this previous valid higher low here, because this is the previous valid higher low. Why? Because it took out this previous high. So this higher low here created this higher high. So now we have this higher low here which failed to create a higher high. So makes this one not a valid higher low on the 1 week time frame, and this one is not, did not create a high. So now price is beginning to show a sign that it wants to break structure. So because now looking at the 1 week, we know price is beginning to show a sign that it wants to break structure. So we are expecting the price to break uh this point here, but price could as well still move up. So we'll have that much information when we get to the 1 day time frame. So now we are on the 1 day time frame. All right, we're on the 1 day time frame. We can see the 1 day as well is also bullish. Okay, I mean, sorry, the 1 day time frame is bearish. Okay, so previously you notice that this is what the 1 day is doing. This rectangle here is the weekly, is what we have here, is the weekly higher low. I mean higher high. That's sorry. Oh, how am I doing? Okay, so yeah, I needed to clean this thing up. Okay, so we can see that what we have those are rectangles here, higher high, this is higher low, higher high, higher low, right, and then another higher high. So this is what they look like on the 1 day time frame. So we have this weekly high and weekly low, and then another weekly high here. Now, if you look at this, you notice that in a week we have 7 days, and then for currency trading we have 5 active trading days for every week. Okay, so 5 daily candles here will make 1 week candle right here. So now these are all 24 hours candlesticks. Right now you notice that price has been bullish from here to here, and then we had a break of structure here on the daily time frame. Same scenario, we have a break of structure here on the daily time frame, which did what? Okay, so we had this break of structure here on the daily time frame, which mitigated something here and did what? Kept going down, and then there was, I feel there was an imbalance here, and this had to mitigate fill that imbalance, and we had this short bearish momentum or short bearish price movement here on the daily time frame. Now you notice this at this time, if for example we are not seeing this information here, at this time we'd say the price is what is bearish. At this time now we'll say the price is bearish, but we know that this thing is happening because the weekly time frame is pulling back. This is that movement here. This is just a pullback on the weekly time frame, and look at it on the daily time frame, it is a downtrend. Market had already broken structure and changing to a downtrend. But if you notice, this is where the previous valid higher low is. Price couldn't go below this low on the 1 week time frame, which is the same reason why on the daily time frame we had a break of structure here, and price did what was in a short bullish trend here. But on the daily time frame, this was looking, on the weekly time frame, this was more of a continuation that failed to create a new high. But on the but on the daily time frame, we are seeing an uptrending market. So if you understand that price is very fractal, showing you the same thing on every time frame, whatever happens on the 1 day time frame, it's also what is happening or going to happen on the 1 week time frame. What you have from the 1 minute happens on the 5 minutes, 15 minutes, 10 minutes, 1 hour, and it builds up to the higher time frame. And also what happens on the higher time frame still is as a result of what happened on the lower time frame. So you have every time frame having its own market structure, but showing you the same thing, telling you the same story. All right. So now on the daily time frame, we can see that on the daily time frame, we can see that we have a break of structure somewhere around here. Okay, this is the daily time frame, right? So we can see we have a break of structure somewhere around here, and then the market had to do what, this, and left all of this imbalance. There's a lot of imbalance here, so the market had to just do this. So okay, so yep, we are still clearing different lows on the daily time frame, right? Market is still creating lower highs and lower lows right here. Okay, in this small bearish trend, and then if you look at this, price created some sort of equal low here, and then liquidity was also taken out. So before we add this small, before we have that small thing there that looks like a break of structure. So let me zoom in. Okay. All right. So now notice this, that price has been creating lower highs and lower lows. Forget about this imbalance here. All right. So let's just focus on market structure for now. So now this was a lower high, and it created this, it broke this low here and created a new lower low here, and then this one here brought in this lower high here. All right, and this lower high here created this lower low here. Okay, so we have this lower low here. All right, now if you look at this, not just a lower low, but also we have an FU candle sitting there. We have an FU candle sitting there because of this liquidity, these equal lows that was here. So the price cleared the market, or they cleared this liquidity. So we have a FU candle sitting here. So this is our daily point of interest. Now look at the daily has created a high. So daily has created a high. Now if you look closely, you notice, so if you look closely, you notice we have a dodgy candlestick there. We have a dodgy candlestick there, and also another dodgy candlestick there before a nice bearish engulfing candlestick. But regardless, this, what I'm seeing here is price rejection here on the daily time frame, creating a new daily high, because this was the last daily high, lower high, created a lower low, and then they've now created a new daily high. So more like a break of structure here on the daily time frame. But price has to do what? We're expecting a retracement back to this POI here on the daily time frame before we can say, okay, maybe the price will continue up on the daily time frame, except the price breaks this area here. If price breaks this area on the daily time frame, then we still expect the price to keep going down. After all, the daily would make sense being bearish. All right, daily would make sense being bearish, and we know this break of structure failed. Right, we know that yes, this break of structure failed. So they've now broken another structure here. Okay, they've now broken another structure here, but we don't have that yet. So all we can expect now is for price to retrace. On the daily time frame down to this POI here. So what we are looking to do now is this: we go to our intraday time frame. Now we are looking for what? A break of structure. We are looking for a break of structure. So this is our intraday here. So on the 4 hours time frame, what we can see now here is that there's no really a clear break of structure on the 4 hours time frame. So we can see high, I mean higher low, little high, higher low, higher high, higher low, higher high, higher low, and then I'm not really going to count this area, but let's just say a high. All right. So now, if you look closely, there was a pause here, and now market has broken something here, right? But we don't have this to be a valid point on the 4 hours time frame. So we have to go a little bit lower again to see what is really happening here. Remember, we are looking for a break of structure on the lower time frame. Why are we looking for a break of structure on the lower time frame? It's because higher time frame has rejected or has created a high. So we're looking for a break of structure that would be inside of this range on the higher inside of this higher time frame rejection, that we know we can catch the sell down to this side and join whatever the daily is trying to do. So we can't really see that clearly on the 4 hours time frame. So we'll move to the 1 hour time frame. Now on the 1 hour time frame, right, still our intraday, on the 1 hour time frame, we can see higher high, higher low, higher high, higher low, higher high, higher low, higher high. All right, you can see higher high, a failed high here, okay, a failed high, and then a break of structure of this previous valid higher low. So we have this break of structure now, break of structure, right here. Now we now have 2 points of interest that we could catch ourselves from, right? 2 points of interest that we could catch ourselves from on the lower time frame. All right, 2 points of interest. Yeah, so we have the first refined IFC here, or the first refined order block here. Our first point of interest is here, and then our second point of interest is here. Now, what you do normally when you have up to 2 points of interest and you're looking for sell or buy, so you have 2 points of interest to the same direction, to the same direction that you want to trade. Now, what you have to do now is, if for example you wanted to trade with a standard lot size, now you have to split 0.5 here and another 0.5 here. So what you do is, your entry is going to be here, okay. So you split 0.5, split 0.5 amongst these two POI. So you have the first entry here, and then your stop loss here. All right, so you have your another entry here, and then your stop loss. So now what will happen is this: price breaks. Sorry about that, guys. So what will happen is this: if price breaks your, I don't know why this thing keeps going back. Okay, so if price breaks the first, hits your first stop loss right here, price hits your first stop loss here, then you've lost whatever. This could be maybe 5-10 pips or 3-2 pips, anything. So let's assume this one had hit stop loss. So you know already that you have a break of structure here. So and then your daily time frame, you know that on the daily time frame, you're expecting a pullback. Right, daily has rejected and you're expecting a pullback. It is not like maybe the daily time frame cannot stop from there and start going back up. It can happen, but the high probability thing here is that the daily time frame wants to pull back to this point of interest here. We have an FU candle here, remember. So now, and also remember that the 4 hours is yet to break structure. Okay, so you have, like, you know that something is going to happen here. The 4 hours is already rejecting this whole area. Okay, so now when you get to the 1 hour time frame, you've been able to catch a break of structure. Now you've had 2 points of interest, so you are now having two entry points, two positions. So if this your first position hits stop loss, it's fine. If you catch the second position and then this one gives you profit, it will cover this loss. To cover this from before this thing moves from here to here, sorry, from here to here, it has covered this loss, and then you have times 10 or times even you have times 10 or times 20 of whatever you've reached, whatever your initial stop loss was before. All right, so okay, so you have the first area could be your point of interest, the first one. This, maybe you can take your entry here or here. Okay, now if you like, you can place your first entry here and use this area here as your stop loss. Place your second entry here and use this area here as a stop loss, meaning that for your two positions you're having the same stop loss. So if the market triggers this entry, goes to this area and triggers this other entry before, let's say we have something like this now. Okay, so let's say market did this, and then you have two entries, two positions running in profit. Okay, now another thing that could happen also is this: price doing this, activating only this one, and come down. All right, because you have a valid IFC here and a valid IFC here. So when I say IFC, I mean other block. So you have another block here and another other block here, 2 points of interest. So you can play it this way. You can enter here, put your stop loss here, enter here, put your stop loss here. Price can activate only this one and go, or price can activate the both of them and go your way, or price can just yes. So now remember what we have, our daily high. So this was our daily high. Now our break of structure, and then this is the POI I was talking about there, and here we have the other POI here. All right, so if we look further, remember this daily, 1 hour time frame has been bullish. Okay, it has been bullish until it broke this structure here, right? On this 1 hour time frame, it has been bullish until it broke the structure. So we are expecting something like this, and then a downtrend. A downtrend on this 1 hour time frame will be a pullback, will be just a pullback on the daily time frame, and it will now make sense because we have the market pullback to this our point of interest, and we'll wait to see what will happen there. So you are not just going to see price can break this and keep going down on the daily time frame. So you wait to see what is going to happen inside of this range on the intraday, on the lower time frame. Okay, so now this was our first illustration showing you where we could have entered from. All right, and then this is the setup, the markup, right, for it. So okay, so if you look closely, all right, so if you look closely, you notice that here is that break of structure. I marked up this higher high, higher low, higher high, higher low, higher high, higher low, and then higher high, and then the BOS, right? The BOS that came through from there, right? And then this is my first POI, right? You can see it, and then this is my first entry here. Price did not come back to mitigate this other one. So price did not take this, market did not, or price, whatever, did not take this entry here. So if you look closely inside, I have another one here. All right, I have another one here, right? So this second POI, remember I said you can they can activate this one and go, or maybe activate both of them and go, or maybe hit your stop loss and continue up. So if like we had something like this now, right? You know that on the daily time frame, what you're now having on the daily time frame would be what you now having on the daily time frame. I really want you guys to understand uh this market structure. So what you now having on the daily time frame would be something like this. So you get would be the scenario market just reversing from here and going back up, uh which has a very low probability, right? So it's not really probable at all. It's not something that could happen. But yes, it could happen, but sorry, it's not something that we should be expecting, right? So of course that's why you have your stop loss in case. So now if you look at this, the first this particular second position here, this second POI here had 7.8 pips stop loss. The risk reward ratio, look at it, 21 21 to 1, 1 to 21, or 21 to 1, anyhow you want to put am. But look at, we have this 21 risk reward ratio, like we are making how many times 21 of whatever we are risking. This is 7 pip stop loss, 7.8 pip stop loss, and this is what we are having. And now, where is our target? Our target is this daily POI. Remember our POI on the daily time frame, which is this one, this rectangle down here. So our target is here, 170 pips. And what happened? The market hit this target very well. As in, it would have been a very nice trade, right? It would have been a very nice trade. Okay, so now let's see another example again. Okay, yeah. So this is that daily this is that result on the daily time frame without all of those markup and all that. Okay. Okay, so no, sorry, this is for the buy side. All right, for the buy side. So this is for the sell, and then this other sample is for the buy side. Now, notice something on the higher time frame, which is the daily, we have a lower low, right? So we are having a very nice downtrend in market. Complex pullback, and then yeah. So we're having a very nice downtrend in market, with this area being our lower low. So price has created what, a lower low on the daily time frame. Now, what are we expecting on the daily time frame? A pullback to this point of interest here. Sorry, pardon my drawing. So we are expecting a pullback to this point of interest here. So expecting the price to do something like this on the daily time frame. All right, expecting a pullback to this point of interest here, and then this, I think this would be our area of break of structure for the higher time frame. Okay, so but this is what we're expecting, price to pull back to somewhere around here before continuing this movement down, because price is in a downtrending phase. All right, so we can see that low. Yeah, you can see, maybe let's say bullish engulfing candle, or price rejecting this area here. So most likely when you have that bullish engulfing, for most of us that done retail strategy, so you understand bullish and bearish engulfing, you understand engulfing candle. So when we have this kind of scenario here, knowing that okay, it looks like price has rejected this area, so we are expecting a pullback to the side. So what do we do now? We go to the lower time frame, go to the intraday, we look for a break of structure. So on our lower time frame as well, on our intraday, we have a break of we have a downtrend as well. You can see a downtrend as well. We have a downtrend as well. Remember, the daily also was in a downtrend, so we have this downtrend as well. So but now we're looking for what, break of structure. All right, so this, so we have this and this high, lower low, lower high, another lower low, lower high, lower low, lower high, and then lower low. Now there's something here, a nice break of structure will happen here. For this is for the 4 hours time frame, but on the 1 hour time frame we might already have the break of structure. So this is the 4 hours time frame. We can't really find the break of structure here on the 4 hours time frame, because if you look at this, price created this lower low here. Okay, price created this lower low here. They tried to retrace, but they couldn't, they couldn't break that the structure at once here. Right, so they stopped here. Now they were supposed to do what? Come down and create a new lower low, but see what happened. They failed to create a new lower low. So we have that failed lower low there. So price has failed to create that lower low there. Okay, so price has failed to create that lower low there. So you can see there we have this failed lower low. All right, on the 4 hours time frame. So let's see 1 hour time frame what we're having. Okay, now if you look closely, you notice that on the 1 hour time frame, on the 1 hour time frame, we're having the same thing. The high here, low, and then we have this low. But look at this. This was the previous lower low, Abi. This was the previous lower low. Now, if you look, put your horizontal line here, there was a little pause somewhere around here. Okay, so there was a little pause somewhere around there that broke this structure, that brought this BOS to continue to the downside before creating this lower low. All right, now meaning that there's something there. So even if we go to probably the if we go to probably the lower time frame, maybe 10, 15, 5 minutes, we'll notice, we'll get to see what really happened here. But there's something inside here that brought this break of structure here. So now notice what happened. Market created this low. Now price did this, tried to do this, and then this happened. Okay, and then this. So price, all of this was just maybe a complex pullback, right? So this was like the attempt to create a new lower low here, but it failed. As you can see, it failed because it stopped here and started going back up. So we have that failed lower low there. Okay, so we have that failed lower low there, and then the next thing that happened is market broke the structure here. Now there's something inside here that brought in this break of structure that we have here. Okay, our POI now is going, we are going to look closely to find the POI sitting there that broke that structure. Okay, so now we also be having, I think, 2 points of interest here as well. So we have this one. Okay, so our first point of interest, and then, and if you look at this looks like maybe it was mitigated already at once here, because you see this candlestick touched this area before going back up. Okay, so all right, so it looks like it has been mitigated, but that's still our first POI, right? And then we have another point of interest inside here, which is more like our demand level. So we have something like rally base rally. So we have rally base rally. So we'll be marking here, and yep. Okay, so we have those two areas as our point of interest. So we are expecting the market to trade into our POI, which is our point of interest. So we're expecting the price to trade into our point of interest for us to catch that buy. So we are looking for buy. Okay, so we want the market to retrace to the side and go, or probably retrace to the side and go. Okay, so that's what we're looking for. Now we'll get to this. The next picture here shows us what really happened. Now, on our higher time, on our 4 hours this thing on our 4 hours point of interest, we have this bigger rectangle. You can see the bigger rectangle there. So this whole area is our 4 hours point of interest. That whole area is our 4 hours point of interest. And then this area here, we have this area here, which is our which is also our 1 hour point of interest. Okay, so okay, so sorry guys for, I don't know why I keep clicking that thing. I need to take us back again. So we have this area being our point of interest. Now, when we looked deep into this part, you see the blue rectangle. You see the blue rectangle inside. Try to bring it. Okay, you see the blue rectangle inside here. So we have rally, base, base, rally. Okay, we have rally, base, base, rally. So rally, base, rally scenario, which is our area of demand. My entry was taken from there. Now, if you look at this, this was my entry, and my stop loss was just below this area. Now, I don't. When we get to supply and demand, I'll show you that. So, I don't need to put my stop loss below this entire area, which is my point of entry. Remember, my 4 hours had my 4 hour time frame had this area as my entry and this area as my stop loss. But I had to refine it down into the 1 hour time frame, and I discovered inside my 4 hours POI, I have another POI sitting there, which is this area of demand, which is the supply. I mean, rally based rally, rally based rally scenario, right? So I can just put my stop loss just below the base instead of me extending my stop loss to the 4 hours below the 4 hours POI, or even since I'm not even using this POI here. Since I'm not using this POI here, this other POI here on the 1 hour, since I'm not using this one, there's no need even bringing my stop loss here. But of course, you can bring a stop loss there, but that would just give you maybe a very big stop loss. Okay, so but here I just have to use my uh my rally base rally, my demand level, okay, to take that entry. I stopped this on the 1 hour. So if I wanted to refine this down to 30-15 minutes, I'll be able to reduce this my stop loss from 10.9 pips to anything around 5 or 3 pips. If I go down to 5 minutes, I should be able to reduce this thing to like 2 pips or 5 pips or thereabout, right? It should be less than that 10, 10.9 pips there. Should be less than that 10.9 pips there. So if you look at this closely, you notice, well, it was a really nice buy. What happened? Market gave us this 185 pips, 185 pips profit. That should have, been our profit, and our stop loss is 10.9 pips, giving us 17 to 1 risk reward ratio, and that would have been a very nice trade. So I think this is uh, another example for GJ GBPJPY. All right, so another example for GBPJPY. Okay. All right. So if you look at this, GJ is okay. All right. I think this is good like this. All right. So GJ is in a bullish trend for the weekly time frame. So this is the 1 week time frame. So we have this bullish trending scenario, right? So I think we have the break of structure somewhere around here. This high, there should be a POI here that be mitigated with this. Then the new high, the break, new high, again the low. new high again, and yeah, complex pullback, still maintaining this low, no candlestick. When you're looking for a break of structure, we are looking for the candlestick to fully close above or below the area we are looking to be broken. All right, so we have this break of structure here that came through from this POI here. So we have the field, we have a new high here. So we have a higher high on the weekly time frame. We have a higher high on the weekly time frame. All right. So now what do? We can't take this trade based off the weekly time frame. So we are just looking to get information to know what is going on in the market. All right. So we know that on the weekly time frame, time frame, we are expecting a pullback to this POI here. So this is our POI here. This is our order block here. Right, this is our order block here, our refined order block here. So expecting this weekly candle to pull back to this area before continuing up, if it wants to keep going in an uptrend, or breaking this and keep going down. Okay, so that's what we're looking for in the on the weekly time frame. Yeah. So now we'll move to the daily time frame. Now what can we see on the daily time frame? Still, price is still bullish. All right, so we have this movement, we have this short downtrend. This short downtrend we are having here is just a pullback. I think is this pullback here on the weekly time frame. So you know that a pullback on the weekly time frame will be a downtrend on the daily time frame. Same thing, that a pullback on the daily time frame will be a pullback on the daily time frame will be a pullback. Will be a downtrend on the intraday and the lower time frame. So you have to be able to relate these things this way. Okay, so now on the daily time frame, we had this downtrend, and then we had this break of structure here. Because if you look at this was somewhat kind of equal low or whatever, but we had that break. There's a break of structure somewhere around here. So zoom closely, there's a break of structure somewhere around there. All right, so we have that. My drawing is really bad, but there's a break of structure somewhere around there. There's a break of structure there to the downside, and then we had this, created this, and then we have this field lower high, and then we have this the break of structure here. Okay, so break of structure happened here when they broke this area. Now, because this is what you need to know. Remember in a downtrend, the valid lower high, the valid lower high has to bring a lower low. So this high here did not bring a new lower low. So it is a field high, but this area here is very important, because this particular one here brought this lower low here. So yes, now that the structure is broken, we are looking for a point of interest, which is going to be around here. Okay, it's going to be around here. So our point of interest. So we look to find a refined real order block here. So this, if you want to call this one out the order block, that's already been mitigated. So we are trying to refine our order block. So we need a refined order block, or call it refined IFC. Should be, when we get to IFC, order block, I'm going to really explain how the refined IFC works. So we have this area. Okay, we have this area here. Okay, so we're expecting the market to pull back to this area before continuing the movement back up. Okay, so Now on the 4 hours time frame, we already have our break of structure here. We already have a break of structure here. Okay, on the 4 hours time frame. So it would have been very easy. Would have caught this. Would have caught this sell. I think would have caught this sell from here. Should be here. Okay, we missed. Would have missed that one in particular because price did not actually get to that this side. It stopped somewhere around there. Did not get to here. So we would have missed that one. Okay, cool. But we already have that break of structure here. So what would have got this other entry? Let's see. There was no break of structure there. So, but this is another interesting point that would have caught right there. And then there's a break of structure here. Whatever broke the structure came in from this area here. Came in from this area here. So would have been able to catch this movement down. So remember what you're seeing here on the 4 hours time frame is just a pullback on the daily time frame and the weekly time frame. But this is already a downtrending market on the 4 hours time frame. So okay, so GJ, let's see what we have here. Okay, GJ on 1 hour is already on downtrend. The BOS already happened. If in this situation you had earlier caught the sell from the BOS, remember the target should be the higher low on the 1 day time frame or any other demand level around, sorry, or any other demand level around the impulse movement that created the higher high on the 1 day. As simple as that, right? So I said DJ already in a downtrend on the 1 hour time frame. So if you caught this sell from this 4 hours, what you should be where you should be targeting is somewhere around here. Should be maybe somewhere around this. Oh, I think this area or this area. So you should be targeting this area or this area, which is the higher low on the weekly and the daily time frame, or on the daily time frame alone. Should be that higher low on the daily time frame is what you're targeting, because the daily time frame is pulling back. So when the daily time frame is doing that retracement or that pullback, the 4 hours or the 1 hour or the lower time frame, 30-15 minutes, will be in a strong downtrending market, as what we are seeing here. All right, but you understand that you're just trading a pullback of the daily time frame. So yeah, so now this is the 1 hour time frame. You can see that here. This is the 1 hour time frame. You see how the market is trending downwards strongly. We're having some sort of order flow here. Very strong downtrend. All right, very strong downtrend. So if you still look closely, you notice yes, we have the weekly and the daily high somewhere around here. The point of interest I mentioned, I said we have one here. Okay, this was one, and then this is another one. Okay, so this is refined refined order block here. So this is a refined order block here, but yeah, this is our refined order block here. So daily refined order block, what looks like it has been mitigated with this candlestick before price, you know, should, before price continue the movement up. But there's another POI here again, which is our daily demand level. So that area there we have maybe, I think, okay, that area there we have uh rally base rally as well. So demand level there. So there's a demand level inside there, or you can even take this whole full area as your other block. Okay, but we have the demand level there. We have one POI here, one POI here. So let's see where the market actually came to. So still highlighting our weekly and daily high. The break of structure on the 1 hour was inside here. The break of structure on the 4 hours is this one here. So this break of structure here is on the 1 hour, and then this break of structure here is on the 4 hours. Okay, so we have the break of structure, we have the nice downtrending market, and then what are where are we expecting this market to come down inside here? Expecting this market to come down inside here, all right, or maybe here. Okay, I think this is a more recent one as well. I will show you that. So this is it on the 1 hour time frame. Okay, so this is it on the 1 hour time frame, still trending down. They've broken the structure, so they are going to like maybe keep going down till they create a low and maybe pull back to somewhere around there, and then maybe continue the movement downwards. Okay, yeah, okay, yeah, that's it. So we are expecting maybe a push to this side and then maybe another push up and then continue the down trending market. Okay, so let's see if we find an example. All right, so remember the key thing here is that higher time frame is very important. So key thing is our higher time frame will determine our overall trend. So the higher time frame is daily or weekly. So this will determine the overall trend, whether we are in a down trending market or up trending market. So our H4, H1 and below will only determine the momentum. All right. So now every time frame has its own market structure. Do not forget that. All right. So putting them together will help you understand whether you are trading a daily pullback or a daily continuation. So remember the higher time frame is the key thing. So when you have the higher time frame, that was a GBP. So when you have the higher time frame, okay, so just the same thing here. All right, so we have the daily already trying to make its way down here. So the on the daily time frame, you can see this is a strong movement downward. So they might choose to just get to this area before doing that pullback, or maybe get to this area before doing the. I mean, this is just a pullback right on the daily time frame. Great. So you can choose to retrace to this area before continuing the movement up, right? Because there's a break of structure already here, so you can choose to do this. So we can have this on the daily time frame, maybe here or maybe here, and then they continue the movement up. But remember, every time the daily creates a high, you go to the lower time frame or go to the intraday to look for a break of structure so that you can short and catch that daily pullback. And anytime the daily creates a low, you go to the intraday and go look for a break of structure or white curve so that you can catch the uh, bullish pullback on the daily time frame via the uh, via the intraday here. So now they've not really, if you look at this, right, just as I've said now, we most likely going to be looking for a strong rejection on the lower on the intraday. So there was nothing like maybe this was uh, a hammer. Then we have that inverted hammer there, another hammer here. So we've not really had maybe let's say for example an engulfing candle that would really indicate maybe a strong rejection from this side. Then we can if like we have maybe an engulfing candle somewhere around here, right? Or maybe even up to here, somewhere around there, and then we'll just have to go to 1 hour time frame, 130 minutes time frame, look for a break of structure and catch this movement to the side, and then we look for another break of structure in the lower time frame somewhere around there to catch the continuation down. Remember that we have to get to this daily POI or this daily POI here. So either of those two, we have to get to that those areas. All right. So uh, there's a workbook as well. So remember first we should see. Sorry, remember first we should see that rejection here on the 4 hours time frame. Then we'll go to the 1 hour time frame. We'll go look for the break of structure. So as you can see on the 1 hour time frame, there's no break of structure. As you can see on the 1 hour time frame, there's no break of structure to the upside. Rather, they created but equal low here, which is more like liquidity. Because liquidity sitting there. Oh, sorry, I don't know why. Okay. Alright, so they created that equal low there. Alright. Now this is still looking very, very bearish until we find, of course, the break of structure. Then we can start looking to go to our more lower time frame to catch where the break of structure really came from so that we can get the buy to the side, and then we'll look on that break of structure here to catch the sell back to the side. But remember that we could get here and price continues moving up. So yeah, nothing is ever 100% guaranteed. Yeah. All right, guys. So I'll see you guys on our next lesson. I hope this will really help you understand the market structure, and also there's a workbook